Islamic Investment Funds. It is a joint pool where investors contribute their surplus money to invest and earn halal profits. Subscribers of the fund may receive a document certifying their subscription. This document may be called a certificate, share, or unit. And in Sharia, its validity is always subject to the following two conditions. First condition: subscribers should clearly understand that the returns are tied up with the sharing of actual profit or loss. However, management is not liable to compensate the losses, even if the loss is due to their negligence. Second condition: the funds must be invested in Sharia-compliant business, and channels of investment as well as the business terms must also conform to the Sharia principles.
AIMS is a globally recognized and an accredited institution. We offer certifications, diploma, MBA, and PhD programs in Islamic banking and finance through an online and self-paced learning system. For registration and details, please visit www.aims.education.
Islamic Equity Fund. In equity or mutual funds, investment is made in shares of joint stock companies, and profits are earned through capital gains in the share value and dividends distributed by those companies. Dealing in equity shares is acceptable in Sharia under the following two conditions. The nature of business of that company must be Sharia compliant, and the company is not involved in prohibited elements or activities. Ijara Fund. In the Ijara-based funds, the subscription amount is used to purchase assets such as real estate, vehicle, or machinery, and they are leased out to users. The Ijara funds own the assets, and the rentals are the profits of the subscribers. Commodities Fund. In the commodity-based funds, a subscription amount is used to purchase different commodities for resale. Profit generated by the resale is the income which is distributed among the subscribers of the fund. Murabaha Fund. Islamic banks purchase assets to benefit their clients and sell it to them on deferred payment, and an agreed profit is added to the cost. They are closed-end funds, and their units cannot be negotiated in the secondary market. Mixed Fund. In the mixed funds, a subscription amount is employed in different types of investments, such as equities, leasing, commodities, etc. The share of mixed funds is negotiable in the market, only if the tangible assets of the fund are 51% or more, while the liquidity and debts are 49% or less. Management of fund. Funds may be managed by managers, either as mudarib or as an agent. When funds are managed as mudarib, subscribers are rewarded by a certain percentage of annual profit. The management gets its share only if the fund earns profits, and they get nothing otherwise. When funds are managed as an agent, the management is rewarded by a pre-agreed fee for their services, which may be paid in a lump sum or on a monthly basis. Sale of debt or bai al-dayin. If a person has a debt receivable and he sells it to another person on discount through bills of exchange, it is termed as a sale of debt. All traditional jurists and majority of the contemporary Muslim scholars are unanimous on the point that a sale of debt is not allowed in Sharia. However, some Malaysian scholars allowed this kind of sale, and they refer to the ruling of Shafi'i school of thought. However, it still may not be justified, because they didn't pay attention to the fact that Shafi'i jurists allowed the sale of debt only if the debt is sold at its par value.